Welcome to A State of Mind, a podcast series all about motivating, inspiring, and educating you in the art of selling luxury real estate. The podcast is brought to you by the Institute for Luxury Home Marketing. I'm Tammy Sims, lead trainer for the Institute and a full-time real estate professional in St. Petersburg, Florida for more than 2 decades. In today's episode, we're going to have a look at the first quarter's luxury real estate performance and see how it stacks up to the 2025 forecast. Today's podcast is brought to you in part by Real Marketing, the only marketing firm recommended exclusively by the Institute. Real Marketing utilizes over 30 years of expertise, and their products are built and customized for you to dominate any neighborhood, anywhere. Go to realmarketingforyou.com. That's real marketing, the number 4, you.com. I'm here today with my co-host Jack Miller, a 25 plus year veteran luxury agent with Onward Real Estate in the greater Nashville, Tennessee market. And joining us is a special guest you're likely familiar with, Deborah Worth, who produces the Institute's Luxury Market Report. Deborah has spent the last 20 plus years consulting in the real estate industry, specializing in strategic marketing. Hello to both of you.
Hi, Tammy. Hi,
Hello.
Deborah.
Hi.
Great to have you both. So, it's hard to believe that the first quarter of 2025 has already gone by, right? When they say time flies, that really is what we're doing. So, Deborah, let's start by talking about some of the trends that were forecast for 2025, and then we'll dig into what we've seen so far.
Absolutely. Um, so really, I suppose back in January, we just come out of a good end a quarter of to 2024, and everyone was feeling quite buoyant about the market ahead. Experts predicted a pretty dynamic year that was going to be influenced by new demographics. Expectations are we'd see a lot of increased inventory, both overall and new inventory coming into the market. Um, and really, what we weren't nobody was really anticipating huge price appreciation, but we were probably going to head into a more stable, balanced market where we'd see a lot more sellers come onto the market as well as buyers being able to sort of get off the fence as such, because new inventory would allow them to their pent-up desire to come in. And there was also a lot of buzz in the air because in December we'd seen an interest rate drop in the US. We had seen quite a number of interest rate drops in Canada. So overall in North America, we were coming into a pretty positive start of 2025. And the other thing I think which was really important to bring in was the start of the great wealth transfer. That has really started to kick in. A lot of people have talked about that in years gone past, and it's sort of, but we're starting to see that money, especially in these new affluent demographics, such as millennials. The millennials are coming in, they're seeing money being transferred to them from their parents, their grandparents. Equally, another demographic was also starting to really take the high-end transactions in real estate. You were starting to see their money go there, and that was the Gen Xers. They had really, you know, they had established themselves, they have money, they're starting to really buy in that luxury market, and they're also seeing some of that great wealth transfer come into play. So I think overall, I believe that the start of 2025 really came out very positively.
And Deborah, how are you seeing it actually play out in terms of actual inventory and sales in these first few months with the data you've collected thus far?
Well, I have January and February, and I will have to go with my intuition for March because I don't have all of the data for March. But January certainly was a phenomenal January. So I'm just going to pull up some stats and read them for you. So we saw in January compared to January of 2024, huge spikes in the amount of inventory that
Mhm.
was in the market, but more importantly, new inventory coming in. And for me, that's really key because inventory will grow, but new inventory is a sign of sellers believing in the market. So that's a big number. And we saw, so inventory rose year over year in January, 22%, but new inventory in January came in at 33%.
Wow.
That's really big numbers. And because new inventory and new inventory and sales kind of, I believe, work quite closely in tandem with each other. So when we see new inventory come on, that's when buyers obviously get excited because there's something new to see. So we saw the sales percentage rise 17.8% in January.
Do you think
So
buyer confidence is staying consistent with this seller confidence you're talking about?
that usually happens, yeah. As sellers, if we can see more inventory, new inventory come on the market, especially currently, because we have a lot of buyers with pent-up demand.
Sure, yeah.
Because we've had many, many years of inventory. And even today, inventory levels are still below what they were pre-pandemic. So that pent-up need, and we have a lot more affluent people too in North America who want to get into that market. There's a real change of perception about owning luxury homes over the last 5, 6 years. COVID, for the most part, has been instrumental to that. But yes, so really jumping in and people wanting to live in a quality home, have all the fixtures and fittings, the amenities. It's very much part of the psyche now. So January was doing well, and it boded very well for a spring market.
Terrific.
And then we arrived in February. It's not that bad. February, we did see significant growth in inventory still. So year over year, we saw a 24% increase. So that year, that was pretty similar. So that's great. But we saw a drop in the number of new inventory. So remember in January, we'd seen year over year a 33% increase. In February, we only saw a 17.9% increase. So that's quite a significant change. And sales year over year only rose 4.5%.
What would you attribute that to?
I think a lot of that has to do with what happened in February, stock market, news of tariffs,
Right.
Those sort of things tend to, especially for the wealthy, they're quite powerful because they're so invested in things that are happening internationally. They're invested in their businesses, etc., etc. So when you have major shifts like that, where you see, we see this whole tariff thing, and then you see what it did to the stock market. Well, the same thing happens, I think, for the affluent. It's not to say that they're not ready to purchase, still they are, but we're having a bit of a hold to try and figure out how that's going to impact. And I think also because some of the tariffs didn't come in March, there was talk of them coming in, and that's been put on hold. And now there's a lot of movement backwards and forwards. So again, when you don't have an absolute happen, I think generally people will put their plans on hold unless they're critical to them.
Now,
Would you
Deborah,
agree?
most of 2024, we were watching to see if interest rates were going to stabilize. And while higher interest rates is more impactful in what I refer to as the bread and butter price points,
Right.
for the affluent, it's about what's the smartest use of their money, right? Are they going
Yes.
to earn more investing? Does it make more sense to borrow? That sort of thing. And we've been so focused on that in terms of how the 2025 picture was going to come out. And now we've shifted to this other uncertainty. And so you've mentioned tariffs and the stock market. And so do you think that that's really going to continue to have an impact over the upcoming months, or perhaps even to change the outlook for 2025?
I want to feel positive because I do believe that the real estate side of things, the buyers want to buy. I think they've been hanging on for a long time, waiting for interest rates to drop, not so that they can get a mortgage, but because of the overall connectivity between interest rates, as you just alluded to. So I think it's there. I think what we want to see is some more stability. And I think when we get to that point where we really understand, it's the uncertainty of knowing, if you know what you have to deal with, you can make a plan. When you don't have all the facts and figures, you don't have a plan. There is talks, from the federal government. There is talk from from Bank of Canada, that interest rates will fall over 2025. Those will have an impact. For those looking for a mortgage, you might not see mortgage rates come down. Interesting. We have in Canada very much seen that. Not quite the same in America, but in Canada, the interest rates have been falling, but we've not seen a shift down in mortgage rates. So those, again, you've got to look at that and say, how does that play out? I wish I had a glass ball for you.
Mhm.
But
It's really,
I'm not negative. I'm just feeling that we need to ride a few months out, and sorry to cut you off there, Jack, but
no, it's
just
fine.
looking back on 2025, January 2025, and comparing February 2025, again, we have seen more sales and we have seen more inventory. So, but it's just not as been as big a jump as we saw
Mhm.
in 2024 or 2023.
Got it.
So that's what's
One,
happened. It's going, but it's just smaller because people are like hesitant.
well, it's funny too, because I know that as I'm listening to you talk about the trends and talk about month by month, I know that the last quarter of last year, I talked to many of our colleagues, particularly those that have been in the business a very long time. I've been through a number of election cycles after 25 plus years in the industry. And I was talking to my clients, and they were assuring folks that this is a pretty typical trend that we're seeing. People get pre-election jitters. It really doesn't matter, at least as I've seen in my 27 years, it doesn't really matter so much the outcome of the election, is that the world is still the same world we're living in, and things seem to calm down and consumer confidence comes back, and we get back on track in January. It's very interesting because we were sluggish in the last quarter or the last half of last year, really, for our market. January, we saw a dramatic pickup. I mean, I was so excited about business in January. And then February is really interesting because it seems like, oh, we got kind of sluggish again, and it seemed like the market pulled back a little bit. So what you're sharing about the statistics that you're seeing throughout North America is consistent with what we're seeing and feeling right here in Nashville. And it's funny because that expectation about things will calm down after the election, that really hasn't happened, has it? It's not really that calm. So I think that what's, regardless of what side of the fence you sit on politically, it's more about it just hasn't calmed down that much. There's a lot of change, a lot of I think just a lot of, now we're seeing post-election jitters. Like there's a lot of things different than they were in years past, and some people are kind of sitting on the fence a little bit more.
Yes,
What are you seeing as
absolutely.
far as in the larger markets? That's what my experience is here in Nashville. Do you think that's what people are seeing in the larger markets as well?
Yeah, I think there's a slight difference in the larger market with regard to the end of the last quarter. We definitely saw an uptick in sales, quite a significant uptick in sales at the end of last quarter, where we'd seen a real decrease had actually been in quarter three across the board.
Right.
So different markets affected by different things for sure. We definitely have, if I was to dive into individual markets, the Northeast inventory is still really weak, right?
Oh,
And we're seeing sales that are over 100%. It's changing, but it's changing slower. They seem to be, a bit behind, which is a good thing for them right now. But yeah, Northeast is really struggling for inventory. Whereas in the Southeast, we're seeing the opposite. Especially Florida, we're seeing a lot more inventory being available, because they had that big rush, obviously, over COVID. So things have settled down, but now things are more open. There's less people who are making that big transition to Florida. So yeah, things have changed for them. They haven't got such a big sellers market as such. Um, so yeah, each market is seeing variables within it, and again, price points within each of those markets very different. Very different. I couldn't tell you which was the price band across North America, which is selling the most, because everything I look at, it's really different,
Yeah.
really different. And it's all, again, still about inventory. If the inventory is available, there are sales. If it's not, then, but some markets, a lot of pressure, and other markets, even if there's no inventory, there's no pressure. So we've got a lot of variables, and you've got to really dig into your local reports and start analyzing what is actually happening there. How many homes are for sale in that price band? How many homes have sold? And follow that trend to see if there's that point, which is the point in your market where things are selling.
Now, Deborah, that makes me bring up a point that probably is going to impact your data collection going forward, and it relates specifically to things being hyperlocal.
Mm-hmm.
Um, and I'm talking about natural disaster, right?
Oh, wow.
So here on the west coast of Florida, we
Mm-hmm.
suffered so much damage from the hurricanes that now a tremendous number of our $1 million properties are homes that were 1.5 million that had damage and are now being sold as shells, right? That's
Correct.
gonna put a whole kink in things. And then when you talk about
Mm-hmm.
inventory availability, think about the homes that were destroyed in California. All of a sudden, there's a swath of existing homes that no longer exist.
Yes.
And so I think just a note to our audience of it's so important to pay attention to the hyperlocal in addition to that. But I
And
want
then to your point, I think that's also going to have an effect as we see these natural catastrophes. People are going to make decisions. It's stated there was a report recently about the older the person was, the less they cared about natural disasters, which I thought was quite amusing. But the younger generation, for sure, it is top and center of their minds. Where do they go that they can feel safe? That they're
mhm,
not going to lose their home to fires or flooding or
mhm,
hurricanes. It
yeah,
is well, they've got a big future ahead of them, right?
yeah,
And
yeah,
they've got children, etc. So
yeah.
I think we have to take that in, if I was a realtor somewhere where we had a pretty mild winters and summers and, consistency, I would be looking to other markets that have a lot more variables and seeing, is that an area where potential buyers could come from?
That's right. That's right.
Yeah.
And so, pulling us back kind of on track of
Oh, yes.
what we were planning to talk about, a question that we always get asked, right? And Jack, I'm sure that you will echo this is should I buy now or wait? Or should I sell now or wait, right? Like the magic 8 ball kind of questions. And you made a comment, Deborah, in our conversations leading up to the podcast that today is not a speculator's market. It's a long-term investment. So tell us more about why you feel that way.
Yes. So I think for a little while now, we have moved into a market where we're not going to see major price appreciation. I'm talking generally, okay? There's always going to be opportunities for those who know how to ferret them out. But generally, we're not going to see major price appreciation. So the people who are investing and buying homes are doing it for the long term. They're doing it for their family, for their sake. It's a home. It's not an investment. So with regard to that, I think those people who really, it's not a buyer's market, but it is a buyer's market. There's a lot more inventory on the market. That being said, is it exactly what people are looking for? That's where we struggle with the new inventory, because for a while, new inventory meant it was matching. They wanted move-in ready, all the amenities, etc., etc., and they were willing to pay. I think if you're a buyer now and you can move laterally and you're thinking and go, look, there's a lot of inventory on the market. I could buy a home that isn't quite right, but you know what? I can make it my home over a number of years, or even a quick renovation now. I just feel that I think buyers have to recognize this is a perfect time to purchase. That's my intuition. Um, and if I was looking for a new home, I think it's hard if you're trying to sell and buy. I get it because
Hmm.
you're going to
Always.
lose, yeah, because potentially you might have a mortgage. If you do have a mortgage on the property and you've got a low mortgage, that's a challenge. But if you don't have that as an issue and you're kind of a cash buyer, so you don't have a mortgage, you're going to sell your home and you're going to buy something else, or even if you're just going to buy another home, I think this is a great market to purchase it. There's a lot out there.
Hmm.
And Tammy, you're right. There's a question we get asked a lot. I mean, it doesn't even matter whether, we don't deal much with first-time home buyers. Of course, they ask that question. But even, very mature buyers and sellers, and that's who we're dealing with in the luxury home market. Yeah, they're asking us those questions too. Should we sell now? Or should we hold on for a while? I try, and I think it's very important. I try always to put myself in the shoes of my client because obviously we would love to have a new listing to sell. Of course, we'd love to have a new buyer to work with. That's always the case if you're in sales. But I try to always advise our clients, based on what would I do? Do I have that piece of property that I know I can sit on and rent another couple of years if it's an income producing property, luxury property, and do better selling a couple of years from now. So you're always looking at this crystal ball, trying to figure out really where the market's going. And Deborah, I'd like to ask you, I mean, what do you think? What's it going to take for any kind of drastic change in the marketplace? What could we look to see happen if the interest rates do change or stock market change? What we should be looking for is to give us even more hope of a more vibrant market over the next year or so.
I do believe interest rates will play heavily. I do also think that, well, the stock market it's an interesting one, um, because if there's if people are worried about the stock market and they don't think it's going to perform, they will take their money away from the stock market, and we have seen in the past they
Sure,
put it into housing. The
sure.
greatest thing about housing, we can't create land. Well, we can, but not really. Um, you know,
They do in
um,
Florida all the time, right,
well,
Tammy?
yeah, they do. They do. We can go up, and if you're in Holland or Netherlands, as they like to be called, you can go out. But we're not really creating land the way we used to, right? Or ever, and so it's always going to be the question. Um, and you just year over year performance, it's gone up and up and up and up. Um, and I just really, really, I mean, there will be areas that are hit by catastrophes that will see
Hmm.
price points drop, etc. That's just the way it is. But overall, investing in real estate is it's a foregone conclusion. It's going up, especially as populations increases. Now, if we see a major population decrease, maybe in 50 years' time, because we are seeing less and less children being born, especially in the Western markets, in the long, long term, maybe not, right? Maybe we'll see it go down, but we're not there yet. We've still got a lot of millennials and the generations below who are going to be wanting houses. Um, and we've got a deficit of housing across
Yeah.
North America.
Yeah.
There's no two ways about it. And also, we're not seeing the building that we saw before 2008. It's still not come back. So
Right. And
my
see,
feeling,
that's going to be the opposite in my market because these homes that can't be by FEMA rules repaired, they're becoming land that didn't exist before for new construction. So it's going to
yeah,
skew our local statistics greatly.
yeah, good luck.
Well, there's a lot of there's a lot of variables. Yeah, for sure. Well, there's a lot of variables too that impact marketability and whether it's a buyer's or seller's market. I think with the insurance industry in
Hmm.
places like Florida, in places hard hit by storms, that we had a insurance broker in our office recently talking about the impact in those particular markets, like Florida or California with the natural disaster. Excuse me, not Florida. Pardon me. Florida kind of always has that dealing with the storms, but Western North Carolina, for example, and
Hmm.
Eastern Tennessee. How did that impact insurability of certain properties and in California insurability? And like you said, Tammy, some properties just can't be rebuilt. These are
Yeah,
all factors that ultimately
Yeah.
ultimately play out and impact the real estate market as a whole when it comes to whether it's a buyer's or seller's market. There's a lot of pieces there to look at.
Interest rates need to fall, but they need to fall consistently and slowly. If we get too big an interest rate drop, what will happen is everybody will rush to the market and the inventory that we have will disappear too quickly and then prices will escalate.
Right.
So I think if I want
As we saw during COVID.
Yeah, if I wanted just to say, let's play, the smart game, it would be for it would be for interest rates to drop gradually, allowing more inventory to come on, allowing the buyers to to step into the market. We would see, I think we'll always see a slight price appreciation, but I think that would help the market a lot. That is what I would like to see over the next 12 months.
It reminds me of how important it is to pay attention to what's happening in the market all the time, right? So part of the topic today is kind of revisiting what the trends and anticipated market activity was going to be for the year, but things can change on a dime. And so all of our listeners have the opportunity to download at no cost the Institute's Luxury Market Report, which is a North American report that is specific to the luxury market. And Deborah, I'm going to ask you in just a second to kind of talk about what goes into that report and what they'll see. But for members of the Institute, they also have the opportunity to download what we call city reports or local market reports that tend to be a more defined metropolitan area. And so that gives our Institute members a means of being able to compare what's going on at that more global level versus what's happening in their backyards, right? And so, Deborah, talk about what goes into that report and what people might find helpful about that on that monthly basis.
Absolutely. So we produce a North American report, and within that report, we've got about 150 markets. So we do have a grid that does a comparative against each of the markets. So you can see what the average list price is or the average sold price is for that previous month, and how many sales and what the average inventory level is. So I think that's quite insightful. We do know that a lot of high-end affluent people own properties in more than one location. So it's for a realtor looking at that, you can get some insights, particularly if you've got a lot of potential buyers. What is there? What's going on in their market versus what's going on in your market. So you can look at it both ways and vice versa if you have somebody who's moving. So I think, you've got access to the North American report. And then within that North American report, we do have an article that talks about what is going on. We look at the statistics, we compare and contrast year over year, the previous month, just to give you an insight of basically what I did a little earlier, which is saying this is what we're seeing. We're seeing, great compared to last year overall, but we're seeing a slowing down compared to what we expected. So those things I think gives you a really strong knowledge of the luxury market. And then go into the actual member portal and you will find 150 local markets. And those local markets, as you said, they're actually based more on county and metropolitan. We're trying to keep it very much that, but they look at the luxury markets within those counties and metropolitan areas. And what we've done is we look at the price, but we do price banding in there. So you can see how many homes there are in, say, the million to 1.5 million range. So you can say, okay, there's 100 there, and then last month 15 sold. So it gives you an idea of the sales, and then you compare it to the price band above or the price band below. So if you're working with somebody who's hovering in a price band and you're not quite sure what to recommend, you can see where the market is going, and what to recommend, especially if we see the price band below is maybe up to a million, and there's only 20 for sale and 15 sold. Well,
Yeah.
guess where you should be pricing your property,
Right.
right? So
Right.
those are the sort of things in those local reports I think you'll find really helpful. It also shows year over year, so you can see, how well we were doing, how well your local market was doing in February versus February 2024. It gives you some insight as to, oh, because Lord, has this much more inventory going on. You can look and see what's the median price been doing over the last year. So there's trends and comparative data. So that's the purpose of it. And the key thing about it is it's just about luxury.
That's right.
Deborah, what's the source of your data? Is it an aggregate total of all the MLSs in the North America, or where are you pulling the data from?
So the data comes from MLSs for those 150.
Mhm.
So each market is looked at separately. So
Got it.
each local market, so there's 150 markets, let's just say, so there'll be 150 local markets. We take those local markets, we aggregate all that information together, and then we get the synopsis of what we believe is happening in North America. And
Terrific.
so, yeah, so there's like something like 15 or 12 markets in Canada and the rest are in the US. And like this month, we're bringing on 3 new markets. So we add markets as we
Mm-hmm.
can, where we can.
Mm-hmm. Mm-hmm.
Yeah.
And for everybody that's listening, so Deborah weeds through all of this information to put this report together, right? And I just have to say hats off, Deborah, because it's amazing. And one of the nicest things is that for us, we can just go grab it and use it, right? And we
Mm-hmm.
know that it's real, authentic data
Mhm.
that is true. And the point that Deborah made of it being very specific to the luxury market. So much of what we consume in the major media messaging about the real estate market is not relevant if you are really looking at individual segments, right? To the same degree,
Sure.
it's not relevant to be using that kind of data as it relates to just entry level properties
Right.
or vice versa, the luxury market. So
Mm-hmm.
so as we wrap up our time together, Jack, I'm going to ask, do you have any last burning thoughts or questions or anything that you want to share?
No, I mean, I think at least for my market, I do feel like there's a lot of consumer confidence in the luxury home market. And it's interesting listening to Deborah talk about statistics because as you're describing the numbers, Deborah, I'm feeling it in our market here as sort of a mirror image to what you're talking about. But I do feel like the consumer confidence is good. And interestingly, I'm seeing we're being have a deluge of new listings coming on board right now in the luxury market in my personal inventory, more so than I've seen in years. And I know again some of that's pent up demand from the end of last year, people kind of sitting on the
Mhm.
fence. And if what you're saying, Deborah, is the case, I'm excited because that would suggest there's a lot of buyers to follow. So I'm excited about what happens over the next few months in 2025.
Yeah. Just one word of caution. We need some stability.
Yep,
Yeah,
yep,
I think there is. I think there's a lot of pent up demand. I think there are a lot of buyers out there, those who are speculating or waiting, they think the prices are going to drop. So, a word of caution to potential buyers, yeah, there will always be the opportunity for somebody to find a home, but I don't believe that you're going to see a national drop. You're going to see big drops, right? The luxury market in particular, most of these people want to sell, they don't need to sell,
That's
right.
right.
right?
We've talked about that
So
in the past, Tammy. Yeah,
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 yeah. So
absolutely.
yeah, it's the same with the buyers. They don't need to buy necessarily, they want to buy. So if we understand that as the basic psychology,
that's
then
right.
I think that helps us really position homes at the right price. It helps people understand that, and as I said, if I was potentially a buyer at this moment, I would be out there looking and I would be ready to take on a property that needs some work because I believe that's where you'll find a bit of a golden egg.
Got
Not a
it.
big one, maybe a little
Got it.
one.
Right?
But
Yeah.
that's where I
Yeah.
would go because they've kind of been forgotten about. And not all of them need massive
That's right.
renovations.
And coming
Yeah.
from a marketplace where we have lots of older housing stock, that absolutely is quite true. So our time has come to an end, and I want to thank all of you out there for joining us on this episode of A State of Mind, the Art of Selling Luxury Real Estate. If you're interested in learning more about the Institute for Luxury Home Marketing, you can find more online at luxuryhomemarketing.com. If you like what you just heard, please share it with a friend. Don't forget to subscribe, rate, and review this podcast. And if you've got a hot topic that you'd like us to discuss in a future podcast, feel free to let us know. Send an email to info@luxuryhomemarketing.com. Thanks so much for listening.